Good morning, folks, and welcome to Stock Charts Today. This is where we review the pre-market activity, and then we roll into a review of the symbols that our members submitted for me to review on member stock chart request. Members, I didn't do a market wrap last night, so you didn't miss anything, but I will be doing a morning update. Why did I defer to this morning to do a morning update with members? The reason is the dollar, which is what we're going to kick things off with today. The rally in the dollar and the price action on the commodity names yesterday was very interesting. For all intents and purposes, I called BS on the dollar rally yesterday. I'll go into the reasons as to why I believe the dollar rally yesterday was BS, why we positioned as we did, where our stops are, and how we plan on adding to our gold mining positions if what I believe is about to happen happens. So members, more to come in a few minutes. Let's first get through the pre-market activity. Then let's get through the member stock chart request. If you're not currently a member, please sign up. You get immediate access. And I will be putting together best stock charts for the coming week. So if you're not currently a member, and you want a preview of what we will be discussing on the week ahead commentary with members, which is our analysis of the stocks that we're watching into next week, enter your email address. We hate spam too. You'll not be spammed, and you'll get that analysis called Best Stock Charts. Members, I will be putting together this evening the week ahead commentary. It's going to be an interesting one because we have a lot of economic data to get through between today and next week. A lot of economic data. Expect a lot of volatility. So let's get to it. It is now the 9th. The time is 4:45 in the a.m. Eastern Standard Time. And this is the dollar. The dollar I have been somewhat bearish on for the past several months. And it's played out. But these past couple of weeks have been, I'll tell you, it's been a resilient currency. Despite the fact that we have had economic data that has come out horrible, the dollar has held in there. Tariffs, no worries. The dollar's hanging in there despite the fact I want it to drop and everything is going against it. What gives? I think that what we have is a manipulation in the currency markets. You saw Mario Draghi come out yesterday, speak dovish, but their statement was hawkish. At the ECB, they will be ending their QE program, rolling it off just much as the Federal Reserve did a few years ago. That should have been euro strong, but it wasn't. It should have been dollar weak, but it wasn't. I looked for reasons as to why the dollar should rally yesterday. What did I find? Nada. And in terms of technical action, let's take a look at a 1-hour chart. Look at this rally. This is not a 2 standard deviation Bollinger Band. It is a 3 standard deviation Bollinger Band. We spent the vast majority of the day yesterday dancing on top of it. Now, I sensed that this rally was coming because I mentioned yesterday on Stock Charts Today, I posted a clip where I discussed with members on Market Wrap that I worried about this 1-hour downtrend channel, this cup handle, which was the 1-hour downtrend channel, and then the subsequent breakout. We got it. So while I was a bit nervous about the dollar in advance of this rally, because we are positioned to benefit when the dollar declines with our commodity trades, I am now very skeptical of the ability of the dollar to continue higher. Why? I think that today's economic data, if negative, will drop the dollar and drop the dollar substantially. What's coming out today? Non-farm payrolls, the jobs data. So members, we'll talk about the position that we put on yesterday. We'll talk about, because it was speculative. It worked out, but it was speculative, and I want to discuss it in greater detail on Morning Update in a few minutes. So stay tuned. All right, so leading off with the dollar, we saw a strong rally. We're pulling back. I will admit, while I am skeptical about the dollar's ability to continue higher, we are pulling back in an orderly manner. We have closed above support. We did close with a 90 handle. The question is this: can we close out the week above this level? Because remember, while we have a new weekly low this week, we have no new weekly high. Now, if we rally and we put in a bullish engulfing of the prior week's move, well then, I'll have egg on my face. And all bets are off. But we're open to the possibility of being wrong about the dollar. Let's get to our friends to the north and their currency, the Canadian dollar, for which I rarely speak, but I want to point out a very interesting setup. Now, I mentioned that we were long of commodities, and I'd like to see a weaker U.S. dollar. Now, why does the Canadian dollar have anything to do with my thesis? It's an indicator, right? 4-hour chart. While the euro has been weak, the Japanese yen weak over these past couple of days, the Canadian dollar, it's breaking out on a 4-hour chart. It is breaking out, and it is also putting in higher lows on a 4-hour chart. Very short term, very volatile, right? So freely admitted, but this is an observation. What we're doing here is that we're picking up crumbs. We're putting together a puzzle, a mosaic of a trade thesis, either to debunk our own trade thesis or to validate it. And the fact that we have the Canadian dollar rising versus the US dollar is bullish. Because what are the currency traders saying? They're saying that the Canadian economy, the commodity producing economies are doing well, at least in the very, very short term, and should rally. So we'll follow through on this and see whether or not this thesis holds up. But keep in mind yesterday that the emerging markets rallied as well. What do they produce? Commodities. What did the dollar do? It rose. What do they normally do? They normally trade inversely of each other, the emerging markets and the dollar. So these are all, again, clues and mosaics that we're all putting together to continue to validate our trade thesis. I'm getting lost in the weeds. Let's continue. I get it. It's early. Let's take a look at gold, since we're talking about commodities. Now, gold, when I went to bed last night, was weak. It was down about $4 and change. We are currently down just shy of 2. We bounced back. No breakout yet. So gold is underperforming right now, my expectations. But again, this is a 4-hour chart, and we have a lot of economic data coming out, which could help drive gold higher. Let's talk about more commodities. Oil. Oil is firming up this morning. We have a higher low. No breakout yet. We have lower highs. RSI hooking up, looking good, 4-hour basis. Let's take a look at our ag names. Wheat resting here. We have a bull flag formation going on. We saw a reversal day on the DBA yesterday. Members will talk more about that position. Let's take a look at bonds. 30-year bond price, lethargic, not much happening here. You can tell bond traders are waiting for that economic data. That's the 30-year. Let's take a look at the 10-year. Same deal. Let's segue into members' stock chart request, and then members will segue into morning update, which is our strategy session for how we plan on closing out the week. The first chart up, CyberArk, cybersecurity. We are long of cybersecurity using a ETF of the sector. We're doing very well with that position. CyberArk is underperforming of late. It's doing well, but it's underperforming. While we have the cybersecurity sector at all-time highs, CyberArk is consolidating sideways. It is not at all-time highs. These bottoming tails here are implying that we're digesting the rally off of the lows from 42.50. We're setting up for a move higher. Daily chart. Keep in mind, we have overhead resistance back here on the daily chart. Sometimes we lose sight of that if we're just using a daily chart. We have higher lows on price. We broke out above the pivot point at 47.74. We're consolidating above a prior resistance / support level. Now, yesterday, we began to break out. We found a bit of resistance. I think we're moving higher here. Volume yesterday was a bit light. CyberArk, I like. I'd be an aggressive buyer on a rally up and through 51.24. So we're not that far away from it. Right here is the resistance level. If we break out and above it, we'll probably go all the way up here to 55.63. I like the trade. We may be a part of it. Domino's Pizza weekly chart. It's had a rough week, rough 2 weeks actually. I'm bullish on Domino's. I remain bullish. The trend is still up. We have a doji star formation thus far this week. We're holding support. Volume to the downside is relatively light. Daily chart. Yesterday, definitely a bearish day. We had a bearish key reversal, but we held support. No reason to go selling yet. Indicators, Stokes are beginning to hook back up again. So what does that mean? We're beginning to regain momentum. RSI was hooking up, then stalled yesterday. Volume yesterday very light. I still like the name. I wouldn't go buying it until we saw us close out the week above this support level, because yesterday's price action leads me to believe that we'll probably see a new daily low, and I wouldn't want to buy the shares on a low below 221.91. I would rather wait to see whether or not we reverse off the lows of the day and close back above the support level. Then I'd be a buyer, because what the market is telling me, if we do get a bullish key reversal and we close back above the support level today, that tells me that we have buyers below. We have reinforcements below. We may be contrarians, but we love to buy where there are other buyers, because it increases the probability of us realizing a profitable trade. Waste Connections. We were along of this not too long ago. This week, a beautiful week. A bullish engulfing of the prior week's move. A breakout on RSI on a weekly basis. We're breaking out on Stoch RSI. MACD's looking really good. Daily chart. We're breaking out here. 73.91 marks an all-time high. We break out above it. No resistance above. Clear blue skies. I love the chart. I like the setup. Members, stay tuned for more on Waste Connections. Facebook. First, I'm going to give an opinion on Facebook and the other social media stocks. I think that they are in big danger of government intervention. They have been doing a lot of censorship of conservative sites. Now, if you had a Democratic Congress and a Democratic president, no biggie. But you don't. Add to that the fact that being political is not cool. Facebook stopped being cool with the millennials a long time ago, and they're using Snapchat and Instagram, which of course is owned by Facebook, Instagram anyway. So I fear with these names that if they continue down this path of censorship, that they're going to be regulated. They're simply inviting the government in. And if they get regulated, you can watch their multiples contract big time. So that's a watch out for these names. YouTube deleted a ton of conservative websites. So they're definitely political, as is Facebook. Zuckerberg, the worst of the worst. And while I do not like liberalism, nor do I like censorship, I do not like the government coming in and telling a liberal what they can say, they can do. I don't like regulation. I disdain government because they suck at everything. But in saying that, I'm reluctant to buy a company that has a CEO that is holier than thou, and he's simply inviting a fight with the government. That goes for Google as well. That's my commentary on a fundamental basis and on a political basis, but on a technical basis, the chart looks good, right? We can't allow our political views to skew our investing views. There's a very good chance here that we break out. Now, we broke out several weeks ago now. The fact that we haven't been able to capitalize on that rally is a bit of a concern. But if we get a breakout above 185, we're going up to 195 in a heartbeat. That would be a new all-time high. A close above 195.32. I think we go a lot higher. So if the market doesn't roll over, I think Facebook is eventually going to break out here. I'd be a buyer on the breakout. I will point out that we have both lines on Stokes trading down below 50 on a weekly basis. That's a concern because if we roll over here, the probability of Facebook breaking the lower band of support is very good. Do I think that's going to happen? Probably not. Let's go to a daily chart. On a daily basis, Facebook broke out on Wednesday. Nice breakout. Volume, though, was very weak. Down volume yesterday was weak. So we're seeing a bit of strength here, but no institutional interest. If so, very, very small funds. So I'll leave off here that Facebook is an aggressive buy on a rally up and through 195.32. Could you buy it down here on a pullback and a retest of the breakout point? Sure, scratch the itch, open up a small position, but I'd be an aggressive buyer on a rally up above 195.32, and we may just be a part of it. So members, stay tuned. All right, members, let's segue into morning update. If you're not currently a member, please sign up. Invest in yourself. We cost less than a cup of coffee a day at Starbucks, and your education is certainly worth that. And we have some very smart people in the forum. So if you want different ideas and opinions, post them in the forum and you'll get them. Okay, members, let's kick this morning off with a discussion regarding the dollar. What the heck happened yesterday? Well, I mentioned on our last market wrap on Wednesday here that while we had a bearish reversal day and we closed down below support, I was concerned about the dollar possibly rallying. And the daily chart had every reason for it to go down on Thursday, but in taking a look at volume on Wednesday, it was very much a concern. Then when we took a look at the intra-period chart, the 1 hour chart, we saw the coupled handle formation forming, and I was extremely suspect of the dollar's willingness to drop any further. Now, we got the rally in the dollar, and it was a powerful rally, but a rally that had absolutely